Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. Wow, what a day today. Remember what I said to you yesterday? I said to you, if we gap up today, as I expected, because of Meta and Microsoft, right? Today, Microsoft was trading 561. I couldn't say sell it fast enough in the pre-market. Meta was trading above the 784, I believe, or something like that. Yeah. And Meta down about 11 off the highs. Microsoft down 30 off the highs. Now, remember what I said to you yesterday? I said, if we gap up, get ready for what? For sell divergences off the 60-minute time frame. S&P futures hit the high of 60, well, overnight, 64, I believe, 68. And then in today's session, I believe the S&P futures hit the high, if I'm not mistaken, the 64, I think it was 58 here. 64, 58, 50. 60, well, that's the 4 a.m. But in the session today, we hit the high of 64, 58 and a half. Now, one of the things I said to you was I was extremely bearish, right? We were 30 some odd points away, 32 points away from 6,500, which was my target back in November. But I'm calling for shorts here. I think before we even touch 65, 6 or 6,700, we get a pullback. Tomorrow we have the employment number. But here's the thing. When you see sell divergences like this on the 60-minute time frame, and I'll show you the chart, it was unbelievable what I saw here today. And then I couldn't even say the word buy, right? But we started getting a big sell-off. The 15 started to reverse, the 30s reversed, and the 60s reversed. And then we got some really great short patterns off the 15-minute time frames at 12:30. Then the second nice short around 2:30. So the 15-minute time frames were really critical here. Big sell divergences here today on the underlying ETFs. And it really, I have to tell you, it was really something that, you know, if you could really understand divergences, you really mastered the art of trading. We had the Russell down about 0.9%, the Dow down about 0.8%. Really phenomenal patterns on the Russell here today. The 30 reversed to sell, it correlated with the 15 and the 60. And then when you look to do, you short every bounce on the 5 and the 15-minute time frames. Two great short patterns on the 15-minute time frames on the underlying on the Russell. Sorry about that. Palantir reversed to sell on the 15 and the 30. Everything lined up. Great short patterns in Palantir on the 15-minute time. Great pattern on Tesla today. Tesla, one of the best patterns of the day off the 15s. Great patterns here. So what else? NVDA, Avago down 2.9%. Really great patterns in NVIDIA. On the sell divergences here. Again, NVIDIA reversed to sell on the 15, the 30, and the 60-minute time frame. So what you look to do, you short the bounce at 12:30. NVIDIA was trading above the 181 mark and closed down about $3, almost $4 on NVIDIA. All right, Amazon just reported after market here down about $2.50. Couldn't happen to a better stock. All right, so let me just start off by showing you, first of all, the bigger time frame, the spiders, okay? And we're going to be looking here, all right? And I got to show you one of the best bear flags of the year, all right? So this is the bounce this morning on the new high right here. We gapped up. Look at what I tell you yesterday. You can't make this up. The major sell divergences here on the 60-minute time frames caused this monster sell-off right here. Even though the algorithm reversed to buy with the MACD above the pivot, I'm going with the fact that the new high, the MACDs cannot confirm on the 60, and it could not confirm here on the 30-minute time frame. Once the 15s and the 30s reversed to sell, once the 15s reversed to sell, I knew that on the indicator 4 that the highs were in for the day. And then when the 30-minute reversed to sell, I knew that the markets were in trouble. Look at this here. Let's see what time this was. This was at 2:30. Oh, that's the 60 minutes. Sorry, let me go back to the 30. Here's a 30-minute time frame. Again, you're gapping up here. The MACDs cannot confirm. When the 30s reverse to sell right around the 11:30 time period, what do you look to do? Look to short the first bounce right here. Boom, at 12:45. And then here's a double red short. We had a 15-minute time frame. So here you can see this is the bounce on the 15 into the negative sell. Actually at this point this was a buy disconnect, but still you have a sell divergence here on the MACDs on the 30-minute time frame. You can see the bounce here. Then the 15s reverse to sell, and in this example here you have a sell disconnect. And then look at this beautiful short here at 3 o'clock. But let me show you the really great pattern here. I was calling for bear flags. Okay, if you look at the S&P futures here, you can see the 30-minute time frame. Look at this monster. The 60 reversed to sell on the continuous contract at 11. It correlated with the 30-minute, and I was jumping up and down like a baboon. I told everybody in the live stream, I said, we have a monster bear flag right here, and you can see 64.35, and you can see how the S&Ps dropped here roughly over 50 points on this monster bear flag. So with that being said, you really have to look when you're trading the indexes. You really need to be looking at the underlying ETFs aligned with the continuous contract. In this case, when I turned around and I saw that beautiful bear flag on the 30, it also really set up the short on the 15-minute time frame on the spiders. Beautiful bear flag. And then when the 15-minute time frame reversed to sell and it correlated with the 30-minute time frame on the underlying ETF, and that happened around 2:30, S&Ps were trading, I think they were trading around the 64.05, and they got absolutely cabooshed after that. And they actually 6,400 to 64.03, and then they got cabooshed all the way down to new lows at the end of the day. All right. Also, Tesla. So Tesla pushes up here this morning, and all three time frames are in sell mode. Let me just bring up the 15 here. Actually, the two of the three time frames are in sell mode here. And here's the gap up here this morning. You can see that the MACDs were negative on the 30-minute time frame and also the 60-minute time frame. This is a major sell divergence here. Here's 7:30. Boom. Here it is right here. Is this it? 10:30. Here it is again. Let me see. Here. This is the bar right here on the third. Let me see. I'm on the wrong date. It's right here. Sorry. The 31st right here. We pushed up. We're in a negative trend. But now all of a sudden, when Tesla reverses to sell on the 15-minute time frame, going into, so this push up here is a sell divergence in a negative and a sell disconnect. The 30 and the 60-minute time frames are in sell mode. Okay, the 15s are in buy, so you look to short that against into the negative MACDs, the non-confirmations here. What a beautiful bear flag getting over. Look at that push up into the negative MACD. Now the strategy is here when Tesla reverses to sell. Okay, when Tesla reverses to sell. Okay, on the 15-minute time frame, you go into now what's called a negative trend, right? And then what do you look to do? You short the first bounce on the 15, beautiful 12:45. You can't ask for anything better. And then again here at the end of the day, a monster pattern here. Tesla, really great short patterns. Look at this thing. Pushed down here, rallied off the lows when the markets were deeply oversold. 306, they ran 4. Beautiful bear flag drops, and then again, this is like I said, the two great shorts here off the 15-minute time frame. This is the Picasso here, 314.08. Boom, minimum $3.5, maybe $5 then potentially, and then here's the second bounce on the 15. You can't ask for anything better on these type of patterns. Apple earnings are going to be coming out any minute here. But here's the great short here in Apple. Apple pushed up here today at 115. There's no way in hell Apple could have held that. You can see here from the 31st here, Apple pushed up here this morning. The MACDs, look at a big selling pressure. Here it is again. So once you really see that you're in a negative trend here in Apple, you can see that Apple, all you had to do was short every bounce on the 15-minute time frame today, 10:30. And then here again, look at this beautiful push up above 209.80. And then you got absolutely cabooshed. And again, Apple is going to be coming out. Actually, you got three overbought conditions here. 1, 2, and then 3. So 3 great shorts in Apple and a negative trend on the 30 and 60-minute time frame. I wanted to show you something else. Just a little tidbit. You see the yellow dots here? Okay, you see the ADX rising? When you have yellow dots like that going into the cayenne, the blue, and you get overbought conditions like that on the 15, let them have them. Let them have them, okay? Let them have them. And because basically what's going to happen here is you want to be able, and you fully understand the importance of when you're trading, you want to understand that this yellow dots represent the price action. So the price action is going deep into the cayenne, and then what you want to do, you want to be able to short the bounces on the 15. Let's look at the IWMs here. This is phenomenal. I mean, really, in all honesty, the 30-minute time frame reverses to sell here yesterday. So we're coming into a negative trend here on the IWMs. The 15, what time here, is still negative. But look at this here. Here's the first bounce on the 15 around 10:15 in the morning. Look at this beautiful short. The 15 and the 30-minute time frames align here. Look at the Russell, 221.49. Never look back. Russell down $2. This is a great, great, great pattern. Again, these patterns repeat themselves over and over and over again. And, you know, basically what you look for here, you just look for the best opportune condition. When you see a negative trend like that here, you can see the ADXs are rising here on the 30-minute, and look at the 60-minute time frame. You can't ask for anything better. MACD negative below the pivot, blue over yellow, ADX is rising. You get the push up here on the 15s. Here's the first one at 10:30. Here's the second one at 3 o'clock. And then look at what happened. Absolutely cabooshed here. Absolutely cabooshed. So for tomorrow, okay, I don't know why I touched that button. For tomorrow, I'm not going to be here. I'm taking a sabbatical for the next 4 days. I'm going to Costa Rica. However, when I do get back, it'll be Tuesday. But tomorrow, we have the employment number, and the employment number is a very big number. Amazon right now is down 4, down over 2%. Apple's earnings are coming out very soon here. However, what we're able to do now for tomorrow is we're in sell mode on the 15 to 30 and the 60-minute time frame on the spiders, Qs, diamonds, and Russell. So with that, we're in a negative trend here. I do believe that if we do get some extreme oversold conditions tomorrow, you get some sharp oversold conditions. So I would look to see if you get into some single digits on the ETFs when I say single digits, like the 1 to 2, because remember, the dailies and the weeklies and the monthlies are still very, very bullish, right? So I do think that if we do get any rally tomorrow, these negative MACDs on the 30-minute time frames right here and the 60s are going to run into a roadblock here. You can see the negative MACDs here. These are really important. So if we do get any push down and we get into single digits, like in the 1, 2, 3 here on the 30 and the 60, you probably look to buy them for a scalp, or I would probably look to see if you get some type of overbought condition on the 15 to 30 into the negative MACDs here, especially again after the 60-minute time frame reverse to sell. However, with the employment number tomorrow, you know, anything's possible. Again, Amazon's down 4. S&P futures just dropped about in the after hours about 10. Apple's going to be critical here in a few. I think they report at 5:30. So again, I will not be here tomorrow and on Monday, so there'll be no podcast. I do need a day off here or there. And so that's that. When I get back, I want to tell you something that I feel is really significant in the game of trading. So this morning, someone I was talking to was very, very frustrated with the execution. And I don't believe in executing orders on the screen. I believe in using the matrix, having one up. If you're going to trade, you have one up for the E-minis or for the micros or for gold big ones or gold micros. For me, it's all about understanding how to scale into a position and scaling out. This morning, someone was trading gold with me early in the morning, and he was not proficient on the scaling in and or using the technology. And I've done this many times at the end of the day here in my podcast, where I say it's very important that you need to learn how to use the matrix, the ladder, the execution piece where you have the bids on the left side, the price in the middle, the sells on the right. I mean, that's the only way I know how to execute orders. Go click, 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 and click, 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 and just trade. However, if you're not, this is something you need to practice on, okay? And you can do it in sim mode, but more importantly, it's really important to understand that how you scale into your orders and your ranges and your trading, and how you most needed to learn how to execute your orders. Very, very it's very important, okay? Also, understanding the terminology in the live stream, understanding the importance of the methodology. Today, I did a call around 3 o'clock. Someone from California called me. A friend of mine said, Steve, I got a bunch of people I want you to talk to. First, I had a question. First thing, how long is it going to take me to learn? I don't know. Everybody's different. I learn differently on certain things than the next person. I can't give an answer like that, nor would I even have a brain cell to even comprehend that. Okay, you could put 5 people in a room. All 5 are going to have different learning paths, right? So it's not some. This is not something. And trust me, this person was not thinking they're going to learn this in 2 days. He was just getting like a general. But I don't know. Everybody's different, right? If you put your time into it, you learn it. You understand the terminologies, you understand the strategies, you understand the combination methodology, you understand how when you're trading futures, you need to look at the underlying ETFs, or if you're trading individual name stocks, you see NVDA reverse sell on the 15-minute time frame, and it correlates with the 30 and the 60-minute time frame. You look to short the first bounce on the 5-minute, the second bounce on the 15, the sequences of events that follow. Right? It's no different than, like I said to somebody this morning, when you wake up every morning, you have a routine before you get to your car. There's no difference. Everything is sequence based. So you have your methodology combined with your sequences, and then you know exactly what to do. I know exactly what to do on, when things line up. Today, for example, at 1 o'clock, when the SPY reversed to sell on the 15 and it correlated with this 30-minute time frame, I knew that 230 bounce was a short. When the S&Ps were trading the 6402, I'm like, oh my God. And I kept on saying it. Wait till these 15-minute time frames reverse and start heading lower. Look out below. And the S&Ps dropped more than 35 points. Okay. With that being said, thank you for joining me tonight on The Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. Thank you. Thank you for being here. Again, I will not be here on Friday and or Monday. I will be coming back on Tuesday. Also, a special announcement. I'll be hosting a live free event Tuesday night from 8 to 10, the Asian markets. Most of my traders want to trade the Asian markets. They do very well, especially if you're trading a prop account. There's no margin requirements like if you're trading a real live account. So please check the link, subscribe to that. Be part of that. If you'd like to text me, my cell phone number is 914-500-7484. Please join my community of traders from around the world and come join me at sktrading.live. I'd love to hear from you. I love doing what I do, and I hope that you're part of this and I can help you go on the right path to success. With that being said, thank you for joining me tonight. God bless you, and more importantly, God bless the United States of America. Be well.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.